The Hedgeless Horseman here. It's November the 18th, 2025. First of all, thanks to the sponsors. Uh, I don't really have a theme for today's video. I simply haven't put up a video in some time, maybe a week actually. Uh, but I also had a lot of stuff to do, including my birthday recently. Um, and yeah, I mean, it's not really been. I thought I would just do a video to uh, basically show that I'm alive, and I'm kind of enjoying. Uh, I'm kind of enjoying this market in a sense that's like the units haven't been, at least recently, haven't been volatile enough that you kind of had to be, glued to the screen in case there's somebody that's panic selling something, and you can reshuffle a bit, basically taking advantage of somebody who's like, oh, I think it's gonna go down tomorrow, or I'm scared, or the end is coming, or whatever it might be, and they sell off some junior 10-20% for absolutely no reason, which means that again, assuming the case is intact, which it typically is if there's no news out, a 10% discount, or even, especially 20% discount in an intact case, that could be an extra 40 to 60% over 3 years or something. So it's just insanely expensive to sell cheap. Selling low is, buying low and selling, or buying low and buying cheap is not necessarily the same thing. It's like in crypto, for example, which we will get to a bit. Since I don't really think, I have no idea what crypto might survive over the long term. I doubt many of them will. So regardless how low they go, I don't consider them cheap. It's just less overvalued in a sense. So in Bitcoin, for example, it's probably the best trading sardine that's basically been, uh, ever created in a sense. One could say, well, Dogecoin is because it's like literally a meme. Um, so it's like everybody knows it's a pure trading sardine, whereas like what Bitcoin has going for it is that it's, in my opinion, a trading sardine, but has much better narrative surrounding it. Uh, in a sense, Dogecoin, again, everybody knows it's a trading sardine, where it's like Bitcoin. Uh, During up cycles, when it really gets going, the sentiment, then it's like, it's gonna go to infinity. It's as safe as gold. It's gonna outperform the risk on assets and all of that. It's like literally the free lunch. That's what the narrative is. That everybody's gonna get rich. There's no risk to it. It's gonna overtake gold. Everything in the entire financial industry is gonna be priced in Bitcoin, etc. So it's like the price is never too high. There's no risk. You don't need to own anything else, basically. So it's everything everybody wants. That's the narrative, and that's why I think it's so powerful. Which, of course, unless they, for the first time ever, a free lunch was invented, that is simply false, and I believe it is false, of course. And at the same time, hey, if it wasn't for crypto, I said this before. If it wasn't for crypto, real assets wouldn't be this cheap. Because like I discussed this with a junior mining CEO recently, where it's like the institutional money is getting into real assets, hard assets, commodities, miners, and all that. So his quote was something like that he wouldn't have a problem. It's easier to raise $100 million than it is to raise whatever, to get retail to buy basically. And we're seeing this in some cases where like the financings are have been getting larger and larger for juniors. I mean, a junior that could only raise 2-3 million a year ago or so might raise might raise uh, 15 million a month ago or something like that. So it's like that's more big money. That's not the money that's out there in the uh, open market real. I mean, some have no liquidity almost at all still, or there's little liquidity. So you have to be really patient. It's like some very liquid junior have been able to amass a million share count position in. It's like that would take weeks, I think, especially if I didn't want to drive the price up. Weeks or months. I mean, I've been buying it because I think it's so cheap. But keep in mind, it's not like I'm all in on that one. It's just that it's one of many cheap ones. Um, but it's like there's no way to really quickly get a big position. So it's like the smaller portfolio you have, I mean, the bigger your edge is in a sense. If you ran a $20,000 portfolio or something like that, then you could get 1,000 or 2,000 into a liquid but really really cheap junior. Um, if you have $1 million, it's like it might not even be possible to get any meaningful exposure in the absolute maybe most severely underpriced cases. And I would say that's like where retail is typically driving the sector still. That's where the typically the biggest opportunities are, because it's of course kind of typical. It's going to be retail. It's going to be the 95% of people who are most attracted to narratives behind Bitcoin and all that. It's like I mean, I know it's going to sound arrogant and I'm going to sound like an asshole, but I'm pretty sure that I mean there's many accounts out there with like 50 to 1.5 million followers who are only basically talking about Bitcoin, and I would bet that pretty much no Bitcoin maxi. I mean, many of them probably just make money from engagement, living off of uh, uh, their follower count in a sense via whatever advertisement, etc. And of course that's what sells. That's what sells. Everything, the saying goes, tell people what they want to hear, not what they need to hear. Let's say. And that's why it's also easier for accounts. Typically, it's like if you're just posting shorts about gold going to 10,000 or whatever. It's like anything connected to greed really and fear, I guess. It's gonna get more engagement because it feels good. It's confirmation bias, and when it's about quick money, quick and easy money, that's what who does that appeal to? 95% of people. Um, so where am I going with this exactly? Well, I guess I'm going where I'm going with this is that crypto is still a thing, right? I mean, today, for example, you have a recoil in yeah, I guess most cryptos, and that's buying that could have been in, for example, real assets, hard assets, juniors, etc. So if there wasn't for crypto, I doubt that we would have a world where gold is at above $4,000 and you have juniors selling like their gold is $2,500. So I'm very comfortable with this kind of market. It's not too hot. It's not too cold. That's what I kind of like. I know a lot of people wishes that the juniors you would just catch on fire. They go up 400%. in 6 months, and everybody's made 4 or 5x on paper, and everybody's cheering. Everybody has like, obviously a lot more paper wealth than they had before. Um, but what I don't like with, let's say, I mean, if the market went or became overvalued, then it's like, okay, we made money then, and I'm honestly only really comfortable investing in juniors typically. I mean, I obviously could invest in more, general companies, etc., that I could sort of understand. But I'm not well versed in biotech. I'm not well versed in, I mean, not even the specialty commodities. I don't know much about rare earth metals. Everybody I talk to says, stay away from rare earth metals because it's such a complicated business. It's like, okay, I don't need to get in there then. Is there, there's a lot of hype around rare earths, and sure, I mean, some have been probably on fire, and we know MP Materials, I think, has obviously been rocking, but I mean, I would never pick up on that opportunity anyway, really, because I wouldn't be able to see it. I can't really judge, yeah, rare earth place. I mean, I have a hard time valuing lithium as well, and several other types of metals and minerals. But I don't really need to. Again, it's like within my comfort zone is like copper, or I should say gold and silver, and copper, nickel, kind of. And I would say easiest is gold, because those projects are also typically easiest to understand. Um, and yeah, as long as those are cheap, I don't have any real reason to go outside of that. It's like, just because there's hype somewhere else, should I sell something and I'm like 99% sure it's cheap and I'm gonna make money on, just to, it's like a slim chance of potentially making even more money in something that I don't really understand. And will I have conviction? I doubt it. It's like anytime you buy a stock where it's like you just have a, you get an impulse. It's like, oh, that looks cheap, or yeah, this could go up a lot, and then a correction comes and you don't really have conviction. It's like, okay, what's the stock that you're most likely to sell? It's the one that you don't have much conviction in, that you bought because out of greed. Where it's like that's a very big tell when you're really getting really comfortable with something. A case that's like, you see why it's so cheap. You think it's just a matter when, not if, you're gonna get rewarded. You don't really care that much about dips. You actually are buying dips, and you're thinking it's like, oh my, this is a 4 or 5x. This is a 4 or 5x, and then it goes down a bit more, and it's like, this is a 4.5 to 5.5x. Stuff like that. So you get really, really greedy in a sense, but for good reason. And obviously, it makes sense. That's like, yeah, something goes down in price, nothing really changed, it gets cheaper. Uh, in that case, that correlates with higher future returns. So that's like contrarian greed in a sense, which obviously is probably might mean that you're um, rationally greedy, compared to something just runs and you're like, oh, I'm buying because I'm so greedy. Then you're just projecting the current trend, right? The short-term trend. Where it's like, if it's short-term trend is down, you're not really buying out of FOMO, right? More rational greed. So yeah, no, I'm liking this sector right now. It's not too hot. It's not too cold. There's plenty of stuff I mean, that's cheap out there, and it kind of feels. I mean, I hope you would agree with this. I mean, I feel like buying hard real assets, commodities, in the ground, juniors. It feels like a secret that nobody else knows, in a sense. That's just what it feels like. There's like, we know every single day passing is one day less of reserves for every miner on Earth, unless they prove up, a day resource as well. But it's like every single mine out there, every single deposit, one day is one day extra of depletion. So every single mine in operation today will run out of ore at some point in time. That's just physics. Um, that's finite, right? Finite resources, and the world is obviously not really, pricing stuff. Somebody said, if people knew how hard it actually is to build a mine and operate a mine, it's like the metal prices would be up a lot more. And people have, I guess, been scratching their heads, thinking like, well, the copper supply shortage. We've had big mines come offline. Uh, we don't see any real pipeline of additional copper, and we're hearing, AI boom, how much power it's gonna need, and that amount of extra power is gonna need a lot of extra copper and whatever, automation. Elon Musk talking about, those robots, Optimus Prime is gonna be, or whatever they're called. They're gonna, take care of poverty in the future, and everybody's gonna live off basic, universal basic income. Well, all that technology, all that AI, that's very commodity intensive. All those, all those servers, all that power, all of that. Everything starts with metals in the ground, right? That's the common, lowest common denominator. Every single crypto needs commodities. Every single, whatever, AI server needs commodities. Every GPU, every single company in the S&P 500. So it's like wherever way the world really goes, it's going to be commodities. That's going to be the underlying, uh, the bottom of the pyramid, I guess. So like commodities, like we need more commodities every year. That's the growth curve. What it's been like. I don't know how much the demand for copper is going up, but maybe 2% per year or something. So it's just increasing amount of metals are needed. Yet it's not really reflected in, the valuation of the companies. And so it's like, why would I want to play, the games like who's gonna win the AI race, which company is gonna survive, yada yada, which crypto is gonna survive. It's like, well, I can just buy cheap stuff that whoever the winner is, whatever happens, what they will need, and I can buy it for, cents on the dollar, and then just wait. Why? Because nobody cares. Nobody's thinking about it. It's not a sexy sector. The only people that really bought these juniors to begin with was like North American investors, and people who can buy in Canada, for example. And Canada's been kind of dead. There's been inflation, yada yada. I hear the Americans are starting to wake up, but it's like there's just a select few people who actually invest in these juniors to start with, and the majors aren't really doing early stage exploration. So it's like it's the junior sector, for all intents and purposes, that's has to provide the new mines that is going to, drive or underpin the economy of the future. And the only real like investors who are trading these stocks on a daily basis is like a niche group, very small. I mean, you see some juniors, probably today as well. It's like there's no single volume traded, and some of those projects might be like really actually good. Some might have the best target in the whatever country they're operating in, or one of the best discoveries in that whole country, uh, that's currently being explored. And still, there's literally no person on earth that's buying or selling that share. That's why it feels like it's still kinda. It feels like investing that a secret, which is shouldn't be a secret. The fact that every S&P 500 company, every technology out there, every robot, every automated, uh, production line, every crypto, all of that, all of those needs commodities. No commodities, no party for any one of them. and it's like you're the only one who kind of appreciates that's kind of how it feels. 'Cause everybody has just assumed you never really needed to care about commodities. But we never also been in a world where permitting has been this hard, where the consumption of metals has been this high. I mean, it's reaching new all-time highs every year. So like all of that is happening, and it's like nobody is aware or sees it. And even to the point where it's like all the reasons for why gold should be going up, and then it has gone up, and still there's nobody really listening. The major institutions, I mean, like now, for example, we read today Elliott, um, famous U.S. activist hedge fund, David Elliott, I think is called right, uh, built a large stake in Barrick. He runs a 76 billion assets under management. One of the smartest hedge fund guys in the entire world. Is now a top 10 shareholder of Barrick Gold. And would you call Barrick Gold to be like, uh, Jesus, okay, yttrium. That's actually, the yttrium was discovered in Sweden, I think. Uh, would you, I'm going to read this later. What was my point? Well, yeah. So this is legitimately smart money, one of the smartest money, and they're buying Barrick, and sure, it might be for a trade and stuff like that, but I think they've done quite some mining investments actually. I think they mentioned that, like, yeah, Anglo American, Triple Flag, etc., etc. So it's like he's obviously not what it seems to be screaming on top of the roof about what he's doing. Let's. I mean, compared to the Bitcoin, it's like everybody's, I'm buying, I'm buying. Everybody else is buying. Every billionaire is buying, yada yada, and they tell people like mortgage your home, and buy whatever, I'm buying. I mean, that's obvious, like FOMO, crazy stuff. I mean, that's greater food trading strategy. I mean, like all the hallmarks basically of just FOMO hype, trading sardine kind of stuff. But it's like these guys are buying Barrick because they think, okay, we could make money here. But like I don't think Barrick comes close to the opportunities compared to some of these juniors. But of course, David Elliott and Elliott Asset Management with 67 billion can't put on a $10,000 bid in a junior. It's like it's absolutely meaningless to them. And I guess this also rhymes then with what the CEO said, that it's easier to raise if he had a project, it's like that had or a company that had high enough market cap and all that, he could actually do, let's say, $100 million raise, etc. Then he believes he would get money, because there's in his words a lot of like institutional money that wants to get in. Some are aware of the, let's say, the rise in real assets, the commodities, how much more power we're gonna need, how much more uranium, copper, silver for the. I mean, Elon Musk recently tweeted he believes solar is gonna be the biggest energy source in the future, and I'm assuming that's gonna demand a lot of silver as well as a lot of other stuff like silicon, what have you. So I mean, it's like all these trends are like more and more commodities. We're permitting fewer and fewer mines, and the discoveries are going down. So this looks like such a rigged bet in a positive way. The mining sector, it's forgotten, it's undercapitalized, underinvested. One of the few sectors, well, I guess maybe more sectors have also been getting a harder time with all the ESG and red tape and all. But it's like the mining sector, where there's like 17 average time frame, 17-year average time frame to go from discovery to mine. I mean, it's absolutely ridiculous. You can basically put up new gigafactories like Tesla much quicker than you can get a small scale mine up and running typically. So it's just the lag times are just absolutely crazy, and I mean honestly, that's also why I believe you've seen so much M&A between producers and advanced projects. That there's like the majors, I guess, they're kind of betting that there's going to be some commodity price appreciation coming, and it's not reflected in the, let's say, current price of the metals, maybe like the copper. uh, the projected supply shortage is not real. I mean, copper is not going bananas. It's near all-time highs, but it's not going bananas. And it's like, okay, well, if you can buy something that's, let's say, not even pricing in today's copper, and you think the supply shortage is just around the corner, why wouldn't you buy a producing um, copper mine? Where it's like, okay, if you buy a very early stage copper project and you think the commodity boom is just around the corner, the commodity price boom, but that project won't be in production for like 15 years. I mean, who knows what's going to be happening at that point? Maybe someday, new technology makes it easier to extract copper, yada yada. You miss the cycle, if you know what I mean. Um, so no, it simply feels like, yeah. I mean, I don't envy the whatever the Bitcoin maxis who's like they're. I mean, let's be honest. Most people are not good investors. Statistics show that. That's like 1 in 20, 5% of active investors can beat an index over a longer time frame. So almost nobody can actually outperform an index when they're active. And the general stock market averages 9-10% per year over the long term. And then these PE ratios, I mean, it's believed that they'll have a negative return over the next 5 to 10 years, excuse me, something like that. And we know inflation and unaffordability of housing and yada yada. Yeah. So everybody's like nothing except real the commodity sector. I guess is cheap. Nobody has high yields out there. I don't know what the S&P yields, but it can't be that much because the PE ratios are so high. So it's like there's not much cheap stuff out there, and I guess that's why Warren Buffett's cash pile at Berkshire has grown to I don't know what it is now, like $388 billion or something. Obviously, it doesn't find anything cheap, and it's more they've been selling more than they're buying, so it just piles up because they can't find anywhere where they expect a good return with that kind of money at least. Um, so I mean, uh, what was I saying? So I mean, yeah, everybody's getting squeezed in one way or then another. Investing is hard as hell. If you're active, and everybody obviously wants to get rich quick and all that, so it makes perfect sense why everybody's kind of pinning their hopes to that Bitcoin is like the risk-free forever returner, etc. And they people look at what happened in Bitcoin over the last or since inception over the last 14 years or whatever, and they project that forwards. Like everybody's heard stories obviously about people making a shit ton in crypto, people getting rich, and then it's like, okay, I need that to happen to me. It's like, okay, barely might have a job, or I don't have much left over after inflation, yeah, yeah. So I'm just gonna go all in Bitcoin because everybody says it. Everybody I follow says it's risk free. It's a new gold, but it's better than gold because unlike gold, which is just basically capturing the inflation rate, so it keeps your real wealth steady. Bitcoin is gonna compound at 25 to 50% per year. So you're actually gonna get risk free. You're gonna get rich without taking any risk. I mean, in today's world, especially, who wouldn't? I mean that's like the beware of the man on a pale horse or whatever the saying is. It's the kind of perfect time. It's like that's what we're hearing. It's like unaffordability. That's like what is it? The average age when people buy their first home. I saw some statistic which it suggested like 50 years, But I don't know if that's right. But still, it's much higher than it was like 50 years ago or stuff like that. And I guess that's also why we're seeing these swings also, like New York with I don't remember what the new mayor's name is, but more like socialist, because everybody feels like they have a hard time and haven't really been aboard the housing market or the stock market and yada yada yada. So I just think all of that fits, and it's just a shame in a sense that uh, well, shame for some, that commodities and mining has been an afterthought for such a long time. No, the world's governments and economies and haven't really needed to worry about that. But we're past the age where all the big discoveries, you could find them at outcrop, you could get them up and running within a few years, and it was no problem if metal prices went higher. And now we of course know that Pentagon is getting more and more involved with mining. They're funding projects. Trump is talking more about critical minerals and metals. The EU is doing that as well, putting projects in Europe on the critical minerals lists, and you have China basically threatening or putting in place export bans and then revoking them or suspending them for a while. So it's like you can see it's bubbling out there where it's like, oh crap. I mean, we're past the easy discoveries, easy times to get mines up and running, and so it's like the think tanks, and it's become a national security about securing supply, domestic supply for a lot of these metals and minerals. But it's like it's nobody else that cares. Institutions have started to care. They can't buy juniors, really, not the small ones. And it's just probably getting worse and worse, right? Because it is still kind of undercapitalized, and the timelines are still ridiculous for a lot of mining projects. So that's what it feels like. It feels like you're in a generational layup, which is the mining sector, for all intent or for a lot of reasons. Again, just if we're talking gold and silver, the immense debt bubble that's just going up, the money printing, the inflation, the geopolitics, the rise of crypto and all that. So much fake stuff, paper wealth out there, so much money slushing around in the system, and you can buy the only thing really that's been a constant for like 3 to 5 thousand years, which is monetary metals. Gold has never lost a battle in over 3 to 5 thousand years, and still people are betting against it. The latest one is people betting on I mean, the real Bitcoin max is like, I don't need gold, Bitcoin is the new gold. I mean, I don't know how many times that must have happened in the past, where somebody tried to make gold obsolete or something, and it never ever worked. It's the yeah, gold has won every single fight it's ever been in. It's never lost a fight. So betting against that is betting against the only thing with a perfect track record since the dawn of civilization. So it's the longest shot you can possibly make, basically, in the financial world. But people still do that. So it's like, I mean, that's human nature. That's never gonna change. And again, I mean, I like to think this, like, if I wasn't aware of the mining sector, if I didn't know how to invest, if I didn't have, because I have many scars, from investing. I started off like, gambling like everyone else, but took, thousands and thousands of hours, a lot of scars, a lot of punishment and all that to figure out, how important patience is, common sense, and use volatility, yada. But that's like, you probably need to be wired a bit for it, and then it's a skill, and then it's patience, and yada yada yada. Not many can do that, obviously. That's why only 5% can actually beat an index if they're trying to. Um, but if I didn't know, if I wasn't aware of this sector and didn't know how to invest, I can see myself being a Bitcoin maxi. Because of course everybody would want to be rich. Everybody would want a simple case where it's like, don't worry about it, it's just going to go up forever because everybody says it's going to go to 200,000 within 6 months and then to $1 million within 2 years, and it's going to go up forever. And by the way, it's risk free, so you can put everything you want in it, or anything you want in it, and you're not taking risk. The risk is not being in the risk free perpetual upside asset. It makes perfect sense. I might do the same thing if I quote didn't know better. But that's the world we are in. And again, just going back to it, it's like I like this sector. I like this sentiment environment now. None of the good or decent to good to great cases or assets or companies out there in the junior mining business are really, they're not even close to being overvalued. So it's like still a buffet. I feel like it's just a, yeah, it's a when not if. So it's like I just, as soon as I have dry powder, I'm deploying it. It just feels like, it's a ticking time bomb in a sense. Like it's a secret that nobody cares about yet or knows yet, but you know it. So you're sitting there. It's like, okay, well, everybody else go and chase all this other hot stuff. Speculate on what was I gonna say? Speculate on biotech, speculate on crypto, speculate on AI, speculate on quantum, speculate on whatever. And it's like in the meantime, when nobody's looking, when the volumes are low, when there's still no real competition out there, you can just keep increasing your ownership of these in situ commodities. So it's like, I mean, yeah, it kind of feel like a Sith Lord in a sense. It's like, I don't, especially the good case. Like if you think about it, okay, I'm not buying a piece of paper. It's like I'm buying all these assets. I'm buying. It's like regardless of how small your position is. Like if you have a 0.12%, if you own 0.1% of a company or something, you own 0.1% of all those assets, all those projects, all the theoretical exploration potential, all the metals in the ground, all the yada yada yada. And then you add on the fact again that's like, well, if you own part of a good gold project, every gold mine that's operating today is gonna run out of water one day. So that might be one of many that needs to replace those, that needs to get into production. And the same goes for copper and all of that. So I really do think, again, going back to why the producers are reshuffling so much, it's that they're preparing. They know they can't. I mean, it's almost like, I don't know how to put it. Kind of like, let's say you see this train wreck coming. It's like, okay, we don't have enough copper development, copper development projects in the pipeline. The sector does not as a whole, and you're seeing this, slow-moving train wreck, copper supply shortage, etc. So you're like, I'm not even gonna fight it. I'm just gonna try to own as much of the producing copper mines when when the inflection point comes, let's say. Where it's like, oh shit, now the copper supply shortage is here. We still don't have enough projects. We don't have any pipeline, no mine that can quickly fill the gap, etc. So the prices will just be higher, and you're sitting there, selling in insurance in a house fire basically. I mean that makes perfect sense. That's why I think they're also especially prioritizing the producers. Why are so many companies out there are consolidating? Because they I believe they see prices spiking, and even I don't know. I mean, it looks kind of dumb, but it's like look at the silver acquisitions of the producing silver projects. They've been bought for like I think 1.5 to 2 times NAV. So it's like on paper they're overpaying for those projects. It's like up to twice the paid price, twice of what the value actually is on a NAV basis. But if you think it's like there's not enough silver. Silver supply is very inelastic, as we know, because it mostly comes as a byproduct, and we know how hard it is to get these porphyry operations up and running, and there's no big porphyry projects coming online, and actually the big copper projects, for example, that get shut down. They also probably produced a lot of silver, so supply actually maybe gone down. So if you're, I mean, it's kind of speculation, of course, that you're paying for a future that's not here, and I don't personally want to do that, but that would explain why we see those premiums to NAVs, or maybe I mean maybe they're using consensus prices, so they're actually fair value at today's silver prices, for example, or the silver prices that were in effect when the acquisitions happened. But still, it's not like they're screaming bargains, but it might be because they're also seeing that hey, there's going to be a crunch in silver as well, and obviously we're not creating more supply if we're acquiring these other silver producers. It's just that we get more of the overall cake or the overall pie going into maybe higher prices for longer, because everybody knows that it's so hard to get a new significant project up and running. So from that perspective, it makes sense what you're saying. It's like you're just they're front running, I guess. That's how I look at it. They're front running the future where all this underinvestment and neglect and increasing timelines to production is coming home to roost. And before this, humanity the governments or whatever haven't really needed to care about it, because there was always some project that could be put into production or was in the pipeline. But then obviously the problem is, as the world consumes more and more metal every year, it means that the pipeline, all else equal, needs to have even bigger projects come online. While we're seeing a decrease, we've seen a decrease in capital spend and an increase in timelines for permitting. And then you have, for a while there's like the stuff in Mexico. Now we've had some nationalization happening in African countries, for example. That's probably not going to be good for the supply of commodities from those places. So that's what it feels like. That's what it feels like. It's like being one of the few niche buyers of some of these juniors at a time like this, today in 2025 in November. It feels like you're one of few people who are know a secret and acting on it. That's what it's like when I see all the again. I mean, it's fun to comment on Bitcoin and all that, but you see all this, like, who's gonna win the AI race, who's gonna, what crypto is gonna work, and you see the Bitcoiners versus the, utility coins, whatever they call them. It's like all the fighting out there about stuff, where it's like, and everybody's ignoring the true bottleneck in a sense. It's like whatever coin, whatever AI, whatever robot wins, doesn't matter. They will all need commodities. If it's ChatGPT wins the AI race, or if it's XAI or if it's some Chinese company, whatever, all the computing power demands metals. So if I mean XAI wins and ChatGPT blows up, okay, crap, but you still have AI. You lose money if you're in, ChatGPT, but it's XAI instead that's going to be using all the copper, using all the uranium, and etc. etc. And let's say it makes the production more efficient, or we will have all these robots in the future where it's like, oh, universal basic income's like great. Who allows for that? Well, because the robots are doing everything and it's very efficient. It's like, sure, but what are the robots made out of? How can you even have that future? Now you have to have commodities to build every single robot, and to build all the power to power all these robots, and all the materials to build whatever the robots are building. So that's like when commodities are least forgotten, when the world is the most advanced it's ever been, and we're going towards like peak artificiality with coins and digital assets and crypto, etc. It's like there's more FOMO, and much more FOMO and hype in all of that than in the basis for all of it, which is commodities. So anyway, no, I think this is a great environment, and it's just I'm patient. Like that's the thing. It's like when you're convinced that what you're buying is cheap, and it's like you're gonna win. It's just a matter of time. You're gonna win. It's not like, oh, it's a big if question. Not in my mind. It's like, I'm not sure if I'm gonna win. I'm hoping I'm win. Obviously, then you would be a lot more scared. But now it just feels like everything is trending to revaluation of real. That's how I look at it. And before that goes really mainstream. And again, going back to the fact, which is thankful as a retail investor, is that I can still buy stuff where retail sets the prices, because they're set so low that the institutions who actually are seeing these trends and actually are not just FOMO hype driven, the Elliott asset managements of the world, they can't even play in the same league. So Elliott thinks Barrick is cheap enough, or a good bet. It's like, I don't think Barrick comes close to how cheap some of these juniors are. But I'm not in competition with Elliott Asset Management. None of us are. They have too much money. They would need to put in at least a few hundred million, I would think. And how many juniors are raising that amount? Not many. So it's like, in my opinion, we have almost no competition still. Yes, some juniors are up quite a bit from the 2020 lows. Many of them were up from absolutely ridiculous levels. So many of them went from the biggest generational cheapness levels ever to like they're still free, very cheap. That's not a bad place to be. I think still, I've seen some people take money off the table. Some are going in cash. Some have talked about getting out of the gold sector, gold junior sector, I guess, as well, completely, because we have a big bump up in gold and gold prices are up. But it's like, to me, it's, we're not even close. It's like some of these juniors who are in the second part of the Lassonde curve. It's like, if they're in production in 2 years, they make it to production and their projects perform along the line of what the economic studies show, and gold prices are around these levels. I think they're multi-baggers. Just based on what they have in their hand. It's just you have to wait 2 years or whatever. Because obviously if just an example, if you have a company valued at 500 million, and it costs them, let's say, 200 million to get into production in 2-3 years, and if gold prices are around these levels and their economic studies are somewhat accurate, and they'll be making whatever 300 million per year, obviously it's not gonna trade at 600 million or anywhere close to that if they're making 300 million a year. So it's like, okay, if they just execute and gold doesn't crashes, you should get a multi-bagger just based on what they already have. If gold goes up even more, if they have exploration success or whatever, or maybe they get acquired before that, it's like, you don't know, but it's like that's a pretty goddamn great bet, especially when the stock market averages 9 to 10% per year over the long term, and it's so highly priced that the next 10-year returns are expected to be negative, I think. I mean, it just blows pretty much everything out of the water. And compare that to Bitcoin, where you're sitting there hoping that it's gonna go up, hoping that it's not a bubble, hoping that it's gonna go up forever. It's not even close. I mean, that's what I don't really get with people who are aware and invested in the mining space, how they can be that excited about Bitcoin. Maybe it's for ideological reasons, where it's like, oh, they think it is literally smart, hard money and all that. Okay, sure, I get that, but it's like, I don't get why you would care that much about Bitcoin if you can tell how cheap. If you know the mining sector, it's like you should be able to tell how extremely cheap some of these bets are, how without guarantees, how still insanely asymmetrical the risk reward is. And I that's why I wouldn't even care about Bitcoin. It's not, the risk reward is not even close to it. So yeah, I guess I'm making this video to just, yeah, it's like, if I haven't been that active on Twitter, it's like, because again, it's like I'm not in a rush. I'm not in a rush with seeing these prices go higher. I mean, they've already probably popped up from, well, most of them have popped up from the 2024 levels, which that kind of cheapness I don't think we'll ever see again. So those opportunities are lost, and now we're kind of consolidating the way, as I look at it. And then you could tell, the sentiment is kind of lukewarm and all that. No FOMO, real FOMO buying in the juniors. It's like, well, it's like that's something. These prices might be in 6 months. All of these price levels might be gone. So would I be in a rush to miss, or to have the second best buying opportunity, let's say, in the last 50 years, go away anytime soon? No. If I put an extra $1,000 in, and I think that has an easy, let's say, 200% over 2 years, that's an extra $2,000. That's some meaningful money. You can buy stuff with $2,000. But if we were already if prices went up tomorrow 200%, yes, you'll make a lot of money on your current portfolio, obviously. But let's say, for theoretical reasons, all of a sudden all the opportunities are gone. You don't see anything that's really, really cheap. You don't see anything that should go up 200% over the next 2 years or even more. Then it's like, okay, great. Now there's no real obvious bargains. Now we really have to work for it. Now we have to scour through all these juniors to find a few that's actually not cheap. Then it's gonna get really hard. Yes, you'll make money on paper, but the thing is, like, I would like to have continuously layups, continuous cases that are no-brainer cheap. When this sector gets overvalued, overheated, almost everything gets overvalued, overheated. Now it's like, again, not too cold, not too warm. Now, a lot of companies that have, some companies actually get rewarded if they create value, so you get that kind of revaluation if things play out well, fundamentally. But if a lot of them are still cheap, it's like, okay, then you have theoretically, endless amount of opportunity supply case plays out. Yeah, plays out favorably. Your thesis works. You get paid for it. There's other cheap stuff where you're waiting for the thesis to play out. You let's say they do on average. You get paid for it. Whereas otherwise, if everything is expensive, there's no real cheapness out there. There's no real easy way to spot a good buy. What are you gonna do then? Well, then it's gonna be really really hard. It's like I'm convinced. I don't think. Yes, maybe the portfolio was cheaper in 2024, but it's like overall, it's like I'm excited for all the cases because how cheap they are. But it's like I'm so convinced that the average play is so cheap that it's not a thrill anymore. It's like I think I talked about that in 2024 as well. It's like it's not thrilling because you know. I mean, a high risk high reward case is very very exciting because you don't know if they're gonna hit or miss. If we're talking at real play, it's terrifyingly exciting because whatever comes out and you don't know what's gonna come out, it's gonna probably have a huge impact either for the better or for the worse. But if you think you've already won, it's like Sun Tzu. You know, every battle is decided before it's even fought. If you're like you can't see how your portfolio is not cheap on average. It's like chronic risk to the upside. Then that's a one-way bet in a sense. It's just a matter of time. It's like you have scratch, you have a winning lottery ticket. The question is when you actually go and cash it in. That's not an exciting bet because you know you won already. The only question is when you're gonna collect the money. That's not as exciting as not knowing if you're, you know, I mean the exciting part is when you're scratching the lottery ticket, right? Because then you don't know. So that's what it feels like. It does feel, again, to just summarize, it feels like the few who actually are still very very focused on the junior sector understands how cheap some of these stories are. It's like you're seeing something that almost nobody else is seeing because the competition is a very very niche pool of Western investors, and they're not really, they don't care that much, and if they do, they might not have that much money because, you know, whatever, inflation, higher rates, and all that. So even if they do see it, uh, they might not be able to act on it. And of course, companies also, you know, spend money to explore and all that, so it needs constant capital injections, which is of course also why this sector can be very tough at times with, you know, the dilution spiral and all that. But yeah, I mean, some of these projects is like it's just crazy where I mean, every country out there basically in the world, in the Western world, there's only a handful of projects that are good. They are not in the hands of majors, and also even fewer that actually could be permitted within the next 5 years. So it's insane. It's like people, you know, think about Bitcoin, where it's like, oh, it finite supply, if it is even finite, at 21 million bitcoins, which I think also is made up of a billion satoshis or whatever. So how finite it is, it's up to each and every one to decide. But compare that to how many legitimate projects of any metal that are out there in each entire country in the Western world that should be a mine and could be a mine. That is only, again, that's only a handful of projects for entire countries. It's like, take the US. I think they have one producing nickel mine in the entire country. It's crazy when you think about it. It's like, I mean, imagine you have the majors. It's like they have, let's say, 10 or 50, let's say 20 large mines up and running. You know, you have the Canadian Malartics, the Detours, the Cortez, Pueblo Viejo, all of these big. It's like they have massive production in total, and let's say they all have like 10-20 year mine life. For 10-20 years, you can't see. It's like at year 9, if we assume they all had 10-year mine lives, at year 9 they would still be producing as much as they did at year 1, right? So the supply would be the same. It's just that the time to depletion is just 1 year. But if we were, I mean, typically the commodity sectors they trade on the margin. So if you have a steady demand level and a steady supply level for 9 years, you can really tell the difference. The price might not stay exactly the same. Then year 10 comes, and every single one of those mines, all that supply gets shut off. All of a sudden, you'd obviously be left with a huge supply deficit all at once, and then you would for sure see the change in price, because all of a sudden, I mean, imagine they all produce 10 million ounces, demand is 10 million ounces, year 9, and then year 9.9, still 10 million ounces supply versus 10 million ounces demand, and then year 10, you have 10 million ounces of demand with 0 million ounces of supply. Of course, all the gold basically that's ever been mined is out there somewhere, but I'm just doing that to make a point where it's like you can ignore I've said this before, I love this saying, it's like you can ignore reality, but you can't ignore the effects of ignoring reality. And if I didn't know better, if I ran a company and I was, I don't know, producing cars or something, and I had one supplier who supplied me with bolts or something. As long as I'm getting my bolts, if I didn't pay attention to the fact that the supplier had, like, he could never make any new bolts, he had 10-year bolt supply, and when that's run out, he can't deliver me a single bolt. If I didn't pay attention to it, for example, I wouldn't feel any. If he could meet my demand every year, it's like, okay, the prices might be very steady. I get every bolt I need, and then it's like year 10, all of a sudden I don't have a single bolt because he ran out of bolts. It's like, okay, how is that going to affect things? I will have to obviously scramble to come up with supply somewhere else, and let's say he was one out of two bolt suppliers, and I was the only customer to the first one, and then there's another customer to the second one. All of a sudden I need all that supply as well, or I need to find a new source for that, and then I go to the second supplier who might already just be meeting the other car manufacturer's demand. And now we're two, maybe with the same demand. It's like we need 10,000 bolts a year, and this other guy is just producing 10 bolts a year. Now there would be a bidding war, of course, because there's just 10,000 bolts of annual supply, and we want 10,000 bolts annually. Both of us. Yeah, then we'll see what happened with the prices of bolts. But up until that time, maybe, if you weren't paying attention, there would be no difference in the price of bolts. But as soon as that supply comes offline, all of a sudden it's like, okay, now I have to bid on the other bolts. So that's, I think, how one should probably look at the mining sector. There's like, if price is indeed being set at the margin, you could be maybe one day away from a big mine coming offline or something like that, but it might not show up because as long as that copper or whatever it is keeps showing up, if it's set on price is set on the margin, the fact that it's one day away from depletion is maybe not going to show up that much in the market, and then all of a sudden it shows up all at once when depletion is a fact. So that's how it feels like. That's kind of the big secret that it feels like nobody's almost paying attention to. That every single mine out there is going to run out of ore, and every single project out there in the hands of juniors. I mean, many of them might be the ones that needs to be the next mines. Um, yeah, no, I thought it. Yeah, I guess the reason for this video was to simply, uh, yeah, just give my 2 cents. It's like why I'm not that active. It's like I don't care. I'm relaxed. I'm not stressed at all. It's like I just want to buy as much as I possibly can before something breaks or becomes too obvious, or we have this copper supply shortage all of a sudden shows up and copper is up 30%, and or something breaks in the system and gold is up $500 in a day and stuff like that. It's like, and I think all of that is coming. I don't know what's going to happen first. Maybe we have a big fat recession because the monetary system or the financial system starts cracking, which some believe is already happening with what's happening in Japan, for example. So maybe gold will shoot up. There will be some kind of demand crush in copper for a while, but it's like long term that doesn't really matter. And because I mean I don't think humanity is going to end this time either. And maybe they do something which whatever they're able to paper over that or something. I don't know how it's going to play out. We just know that at this trend we're going to need even more mines of copper, nickel, and pretty much most materials. Uh, the debt bubble is just getting bigger and bigger, so the reason to own gold is just going up as well. And I don't know what's going to happen first. I don't know if we can keep kicking the can and gold just treads higher and copper goes up because all the infrastructure investment and the rise of India maybe and stuff like that is going to drive up copper, and you get paid off on the copper bets before you have a real financial crisis, and then gold shoots up, or maybe we have a financial crisis first, gold shoots up, and then you can pick up cheap copper projects, because I mean look what happened in 2008-9 with the copper price. It just went straight to the basement basically and provided the best buys for a generation. I'm not after perfection, and I can't predict the future that well. I simply think we're one of few who are actually taking rigged bets in a sense, and then I'm talking like overall. I'm not saying that any one junior is a rigged bet that it's 100% going to pay off, but yeah, hate or love it, every single mine is going to run out one day, and we need new mines. And yeah, lastly, it's like just I've been looking, at Bitcoin, and it's like yeah, stuff is happening. There's some trend lines breaking. It's like I don't care much about TA for individual junior companies, for example, because I honestly I don't get the point. I mean, if you see something that's just insanely undervalued on a on a current basis, even more so in 1, 2, 3 year time frame, who cares if the short term trend is down? Why would I sell something that's with a bad short term short where the fundamentals is that yeah, okay, it's been declining now for whatever reason, but I think it's going to trade up here in 2 years. Who cares if it goes like that, or it might be bottoming the same day, etc., etc. I mean, it's not really it's not going to be the big problem. I mean, it's like why I keep saying it's like the reason why people lose is not because they don't pick the exact bottom, and not even close. I mean, even in okay, I think it froze. Or did it? Yeah, maybe. Anyway. And this is the logarithmic chart for Bitcoin, weekly chart. Again, this is not investing advice or anything like that, but I mean, looks to me that maybe this kind of trend line is somewhat important. And I think it was Goldfinger that put out that Bitcoin is getting hockey stick saved by El Salvador, who bought 1,000 Bitcoins. Because that's the thing, right? I mean, and that goes for a lot of other asset classes as well, because never before has people been more momentum driven and trend following. So it's like, I don't know what's gonna happen if this breaks, because this Bitcoin more than anything else, I'm gonna say, is a momentum play. I mean, we've seen recently what's happening as soon as it started, breaking some supports and stuff. It just goes straight down, and that's not unique for Bitcoin. But I believe it's like my view of Bitcoin is that I think it's just a pure trading sardine with exceptional narrative attached to it, which obviously flips a lot. I mean, up here, every bullish narrative is on full display, and everybody feels great buying. When it goes down, everyone is like, okay, this is a Ponzi scheme, or it's a, etc. It's not going to work. And in the meantime, they've been able to attract more and more buyers, so the trend has been up. But one day, I think the ultimate high is going to be in, and then the trend from there on out is only down on a long-term basis. So it's, I mean, if you want to play in Bitcoin, it's like, it's up to each and all. Um, yeah, up to yourselves, of course. I don't touch the stuff. What I really don't like are all the humongously large accounts out there, basically telling people to mortgage their houses, that the forever bottom is in, that they're leveraging up, and that all in Bitcoin is a good idea. I mean, that just says everything about how shitty they are, in my opinion, as investors. There's no way those guys are good investors, because otherwise they would never have done it. Anyway, thanks for listening. If I mention any companies, consider me biased. I'm biased against Bitcoin. I don't own any. I'm biased for any company I own, because I own them. Not investing advice. Don't bet money you cannot afford to lose. I don't have a crystal ball. I just think that, again, it's like the only way I think to being able to make money as a quote active investor in the market, or the only proven way, I think, is especially more today than ever before, is common sense and patience. Those are the only obvious bets. It's like short term, I don't know. I don't think I might not even have one obvious short term bet. But all my holdings, I would say, are clear long term bets where there's good risk reward. But I don't know which is going to play out exactly. I don't know which ones I'm going to lose in, which ones I'm going to make money in, how much I'm going to lose if I lose, how much I'm going to make if I make. I just want no-brainer risk reward, where it's like, hey, I can see stuff going right. If they go right, price could go up to somewhere within this box. And if things go bad, I'm going to lose money. And we can only lose 100%. Upside is, as always, unlimited in a sense. Yeah, that's it. Thanks for listening. Hope you have a great November. Bye bye.